Hey guys, how you doing? Let's talk about your funds to close when you're purchasing a house. Typically, I get a client that comes to me and they tell me that they have a certain amount of money that they can use for the transaction. A lot of times they'll say something like, I got $10,000 to put down on this house. Well, then I find out later that they really don't have necessarily $10,000 to put down on the house because they still have to account for the closing costs, the prepaid items, and their tax prorations, which are basically the money that they pay back for the taxes that the seller paid in advance. And that happens typically in a state where the taxes are paid in advance, where some states the taxes are paid in arrearage. So if you're putting down 5% on $100,000, that means you are bringing $5,000 to the closing and you're borrowing 95% of that money, or $95,000 from the bank. So you need a $5,000 down payment. You'll typically need a few $1,000s for closing costs, and you'll need about a year's worth of taxes and insurance to add to your escrow account, unless you're putting 20% down when you elect to pay your taxes and insurance on your own. So when you're trying to decide how much you're going to spend and how much money you need for a down payment, closing costs, prepaid items, and general funds to close, make sure you're taking all these factors into consideration. Your loan officer is going to know more about this, and you can definitely read up about it. But if you have any questions, you can call me anytime. 586-615-2868. Good luck and happy house hunting.